Every weekday, at exactly 9 in the morning, a bell rings in Lagos. Billions of Naira start moving. Stocks change hands. Companies gain or lose value in real time. Most people watching all of this happen have one question: who's actually running this thing? And more importantly, how does it make money? Because here's what most people don't realize. The Nigerian Stock Exchange is not just a marketplace, it's a business, and it's a very profitable one. Let's get into how it actually works. The NGX started life in 1960, the same year Nigeria got its independence. It was called the Lagos Stock Exchange back then. A small room, a handful of companies, a few dozen investors. The idea was simple: give Nigerian businesses a place to raise money from the public and give Nigerians a place to invest their savings. For decades, it operated as a not-for-profit organization, member-owned, no shareholders, no profit motive, which sounds fine on paper. But it meant the exchange had no real incentive to grow, innovate, or compete. It just existed. By the time the 90s hit, Nigeria's economy was turbulent. Military rule, currency crisis, investor confidence at rock bottom. The exchange was barely functional. Trading volumes were low. Companies weren't rushing to list. Something had to change. In March 2021, everything changed. The Nigerian Stock Exchange went through what's called a demutualisation. It converted from a member-owned, not-for-profit entity into a fully commercial, shareholder-owned, profit-making company. Now, what does that actually mean in plain English? Before 2021, the exchange was owned by its members, the stockbrokers. Nobody outside could own a piece of it. It wasn't listed anywhere. It didn't have shareholders. After 2021, it became Nigerian Exchange Group, PLC, a publicly listed company. Anyone could buy shares in it. It had a board accountable to shareholders, and it had one clear mandate: grow and make money. That's a fundamental shift in how an institution operates. Think of it like a cooperative market converting into a supermarket chain. Same purpose, buying and selling, but now with investors, profit targets, expansion plans, and a stock price to defend. So how does NGX Group actually generate revenue? There are four main ways. The first one, and the most straightforward, is listing fees. Every company that wants to be on the Nigerian Stock Exchange pays to get on. There's an application fee, a listing fee based on the size of the company, and then an annual fee to stay listed. Think of it like rent. You want your company on the board? You pay for the space. Right now, there are over 150 companies listed on the NGX, each one paying to be there every year. The second revenue stream is where it gets more interesting. Trading fees. Every single time a stock is bought or sold on the exchange, NGX takes a cut, about 0.3% of the transaction value. That sounds tiny, and on a single trade it is. But on a day where billions of Naira worth of shares change hands, that 0.3% adds up very quickly. The third stream is one most people never think about: market data. Every price you see on a trading app, every stock ticker on a financial website, every analyst report referencing NGX data, someone is paying for that. NGX owns the data, and it licenses it. Banks, fund managers, fintech companies, international investors, they all pay subscription fees to access real-time NGX data through a platform called X-DataPortal. That's pure recurring revenue. No trading needed. The fourth stream came directly from the demutualisation, NGX Real Estate. The exchange owns significant property in Lagos, office buildings, commercial spaces. That property generates rental income year after year. So, what does all of this add up to? In 2025, NGX Group posted revenue of 26.2 billion Naira, operating profit of 11.83 billion Naira. That's a 40% jump in operating profit from the year before. For context, this is a company that, before 2021, wasn't even designed to make a profit. 4 years after demutualization, it's pulling nearly 12 billion Naira in operating profit annually. And the market itself is growing too. As of mid-2026, the NGX All-Share Index has crossed 200,000 points for the first time in its history. The total market capitalization sits at over $100 billion. More companies listing, more trades happening, more data being sold, more money flowing through the system. Every single one of those things directly increases NGX Group's revenue. But here's the thing worth understanding about why this actually matters. A stock exchange is not just a place where rich people trade shares. It's economic infrastructure. When a company lists on the NGX, it gets access to capital it couldn't get from a bank. That capital funds expansion, jobs, growth. When regular Nigerians invest in the market, they become part owners of the companies building the economy. Their savings grow alongside the country's growth, and when the exchange itself is profitable and well run, it attracts foreign investors. It builds confidence. It signals to the world that Nigeria's financial system is serious. In 2026, the NGX moved to a T+1 settlement cycle, meaning trades settle within 1 business day instead of 3. That's a reform that puts Nigeria ahead of most exchanges on the continent. None of that happens in a sleepy not-for-profit running on autopilot. It happens when the exchange has a business model, shareholders to answer to, and real money on the line. So the next time you see the NGX All-Share Index flash across your screen, remember, behind every number, every trade, every listed company, there's a business collecting fees, licensing data, managing real estate, and growing its own balance sheet. The stock exchange isn't just where companies make money, it's making money too. That's what we do here on the Empire Desk. We get into the systems and stories most people walk past every day without really understanding. If that's the kind of thing you're into, subscribe. There's a lot more coming.